How far do you think they can take it?
John, what's happened? Really, what's happened? For 30 years, I've been hearing that central banks, their biggest problem was fighting disinflation. Nobody knew how to do it. But if inflation ever came back and we had high inflation, we had the roadmap, we had the blueprints, we knew how to do it. Well, here it is. And what I'm hearing from Priya is that we're too frightened of actually doing what's necessary to put the inflation genie back in the bottle, to hike rates dramatically, raise the cost of financing so that these higher prices can't be supported. Yes, it could lead to recession, but at least you put the inflation genie back in the bottle. I guess in the end, I see both on the fiscal and the monetary side, no appetite to do that. So yeah, I don't see a terminal rate getting much above 2.5% to 3%.
Bob, you just said something really interesting there. You used the word frightened, as if they're scared of it. And then you used the word recession, and implied that maybe a recession would be worth putting the inflation genie back in the bottle. I want to build on that, Bob. Why do you think that's a fair exchange?
Because the difference between today and when Volcker was running the Fed and raised rates from 5% to 20% in 5 years is that the central banks have become dependent on financial conditions indicators. So they look at people like us, and if we throw our rattles out of the pram, then they get panic-stricken that that could lead to recession because that's what their model tells them, and they back off. And I think that's how we've gotten into the position we're in today.